We have a very, very interesting panel that we're going to talk about, trade and investment between U.S. and China and the overall economic climate that is happening currently in U.S. and also China. So I'm not going to go through a long sort of like reading of the bio of these three gentlemen because they are all, Hall of Famers in their own right in the business world, and all of you know them well, and obviously their bios in the package. But on my immediate left is my good friend Victor Fung, chairman of Li & Fung. And in fact, this is really a treat for us in California here because Victor is always in high demand in all the speaking circuits throughout Asia, in fact, globally. Because he's in such high demand, he hardly ever come to LA, and talk to folks like us. So I'm so glad I finally dragged him out here, all the way from Hong Kong to have this opportunity to talk to us. So next to Victor, Charlie Munger. Again, there's no need for any more sort of like explanation who he is. In fact, this is again such a treat because I know he stopped, holding his shareholders meeting at Wesco. So for those of you who wants to go hear him talk, you might have to fly all the way out of Omaha. And if you haven't made the reservation, chances are all the hotel rooms are all fully booked. So you're not going to be able to get there to get a chance to listen to him. So this is again a wonderful treat for us to have Charlie Munger with us today to talk about his wisdom of investment. Last but not least, on my far left is former CEO and founder of Costco, Jim Sinegal. And here's, I think I'm going to ask a quick question around the audience. Those of you who are Asian Americans, any of you that do not, in terms of your household, do not have a Costco card, please raise your hand. Well, Jim, I see nothing. So I think that my prediction is absolutely right because I have never met an Asian Americans that live in America that do not have a Costco card. So in any event, I think that it's great to have all three of you here to share your wisdom about what's happening in U.S. and in China, challenges in terms of the trade and also investment, etc. So anyway, I'm going to go right ahead and ask Victor, you the first. Question for you. In fact, instead of asking you a question, when I spend time in Hong Kong and Asia, in China and Taiwan and so forth, because in the Asian countries, they're so much more involved in the global trade business. So obviously, most of the folks that I talk to, many of them are involved with exporting to U.S. and Europe and so forth. They seem to have a much, much better knowledge about the global supply chain. Now, Li & Fung, which is the largest global supply chain in the world, and your company have been so much actively involved with, the trading, logistic, distribution, of all the business, in particular related to consumer in U.S. This is an area that I think that a lot of the American public has a very keen interest now because there's always talk about U.S. and China trade deficit. But quite frankly, many of the folks here do not have a very clear understanding about what exactly this global trade work, because that's why we still hear that, like, for example, Senator Charles Schumer would always talk about, well, this huge trade deficit between U.S. and China is totally not acceptable. And there are a lot of folks that still think that trade is really just a bilateral thing between one country to another, when in this sort of global economic world, trade really involves multinational efforts throughout the entire world, from raw materials to manufacturing to distribution, and all the way out to sort of retailing to consumer. Now, I would love to have you to maybe use your company as an example to share with us about what's happening in this sort of global trade world,
Okay. Well, thank you very much, Dominic. First of all, I just like to say what a great pleasure it is for me to be here. I must confess I've been a member of the Committee of 100 for a long time, but I have been a very inactive member residing in Hong Kong. But having been here now, I must say I'm so proud to be a part of C100. The goals of the organization, what you're actually doing is absolutely right on. And I really am sorry that I haven't been an active member, and I'll correct it in future.
You would think that I pay him to say that,
yeah, right.
But in fact he paid a big chunk of money to be here. So this is definitely a great member.
Now sitting next to the chairman, I know what to say. Okay, Dominic, let me just take a few minutes to answer your question. My own company, Li & Fung, was actually founded in 1906 by my grandfather, so I'm third generation. We really have been traditional exporters. And in the last 30 years, I think we evolved into what I would call a global supply chain manager. The key issue here is really the following. Manufacturing 30 years ago compared to today has undergone an absolute revolution. Before, when you see a product, basically it was manufactured maybe by one company, definitely in one country, and it was exported to another country to be consumed. That was the old model. 20 years ago, that whole model began to evolve, and today it's totally, completely different from reality. The reality is people take sections of the manufacturing process and disperse it to different factories around the world. And then everything gets tied back together again using two enablers. IT, basically using the internet for information, and also what I would call modern logistics, getting everything from here to there just in time. So all products are now made on a global basis, made in a number of countries by a number of manufacturers, and then reassembled, so to speak. So the idea of being a country of origin is now a very questionable concept. Because if you only did the finishing in one country, and components came from 3 others, what is the country of origin? You get into all sorts of esoteric arguments of where the country of origin is. The real issue, and that answers your question directly, is that I think we have to evolve to a different measure of trade, not based on the old model, which is no longer reflective of reality, but to think about value added in different countries. And then think about that instead of defining one country as the country of origin and then chalking up all trade to that country. And that is the fallacy of looking at bilateral trade deficits. It does not reflect reality as is captured in value added in the respective countries. Let me finish by just giving you an idea of how this global supply chain is now actually evolving. What is the future of this global supply chain? It's now so dispersed. I must say, again, if you go back 20 years, the world used to be really working on a lot of the manufacturing being done in the developing countries, and everybody was exporting to the OECD or the developed countries to be consumed. 80% of the world's consumption is still done by the OECD countries. So in a sense, 20 years ago, and really up to 2008, the financial tsunami, you looked at the world as kind of moving goods from east to west. Li & Fung sources from the east and sells in the west. A little bit simplistic, but not that far from the truth. And all the containers would come back to the developing countries or in Asia empty. Basically, it was sort of one-way trade. Now, from 2008 onwards, actually, to be fair, this trend has been ongoing for maybe a decade now, but it was not that apparent. But from 2008 onwards, it has now become very apparent. This simplistic idea of sourcing from the east and selling in the west is no longer applicable. The model is a lot more nuanced. The developing countries that used to do just the manufacturing are now becoming large consumption countries. And a lot of the products, yes, we will continue to manufacture in the Chinas and the Indias of this world, but a lot of the products will now be distributed locally. Okay, and of course, a lot of it will still be re-exported, but the local component is going to loom larger and larger. And guess what? We're now beginning to think about Italian products to be sold in the Chinese market because the Chinese consumer now is going after a more luxury-oriented products. So the flow of trade and where you distribute and how these supply chains are moving now are really going to be a lot more nuanced. And this has become very apparent since the financial tsunami of 2008. And I would say that the future, the next 30 years in the evolution of supply chains, I think you're going to see a lot more change. And I think as we will, I'm sure, get into, I think this is going to be intimately related to that investments, cross-border investments especially. Because trade and investment, in my mind, are two sides of a coin. And perhaps I can elaborate on that later. But I hope this gives a little bit of setting for the global supply chain's evolution.
So just a quick follow-on. What are the brands, major brands that you represent or you own? I mean, I've been selling in the retail.
Well, one of our top customers sitting right here. We have a brand called Hathaway, which is supplied exclusively to Costco. And all of you that have Costco cards, please buy Hathaway brand at Costco. No, we basically deal with 2,000 plus retailers around the world. Costco, Walmart, Kohl's, and all the way to the department stores and so on. Those are our real customer base.
Well, I guess I would add that just about most everything that you buy in any of these retail stores, chances are Li and Fung has a hand to it, one way or the other. So in any way, well, again, thank you for your insight on this global supply chain, because I do feel that this will be a helpful information for our audience. So Charlie, let me come to you. You've been, such a great, investor, and in investing good company, know what you go, why they're successful and so forth. And I guess based on history, you really have not made a whole lot of investments in China, except, in fact, a few years ago, you actually, the one company that particularly caught your attention as BYD, and through your interest, I think that together, Berkshire Hathaway actually also made a meaningful investment to BYD, and get BYD to be an extremely well-known company now throughout America. And interesting enough, when they first opened the office in LA, I guess about a year ago, at that point, our mayor, governor, everybody's in town, celebrating the opportunity for LA getting BYD to have a headquarters in Los Angeles. So the question I have will be, so what makes you think that's a company that you're interested? And specifically, this is a company from China, and a technology company, so to speak. Any characteristics in there that you find interesting that makes you decide that this is the right investment?
Well, I was introduced to BYD by Li Lu, who's somewhere in the audience. And he has helped the Mungers and some other investors invest money in Asia. And I have a high regard for him, and he brought it up why we enthusiastically followed his suggestions. So the real person that picked BYD when it was small and obscure was Li Lu. And that's interesting. I never hired anybody to help me with family investments in my whole life except Li Lu. And I did that fairly late in life. By the way, I heard all his comments about, I'm so glad to be here. Well, I'm glad to be here too, but of course at my age, I'm glad to be anywhere. But what interested us in BYD was, here you've got one of 8 children of a peasant getting an engineering education through the Confucian ethos of an older brother who sacrificed greatly to educate this brilliant kid that was born into this obscure family. And he becomes not just a copycat entrepreneur that learns to make things that people have already figured out to make in the West, but Wan Chuanfu has actually invented some things that are important. And it's very important in terms of the good relations of both countries that China have these entrepreneurs who not only succeed financially, but do a lot of inventing, because that's a very important hallmark of civilization when you stop copying and start inventing. And BYD is relentlessly engaged in hiring brains out of the best engineering schools that they can, and as near to the top of the class as they can. And of course, their idea of an adequate piece of real estate starts at 100 million square feet. And that they are very aggressive people. And when they first went into the auto business, of course, Lulu and I didn't really like it because that's really difficult. A little unknown company buying a bankrupt auto plant looked like a recipe for extreme high risk. Of course, Wan Chuanfu paid no attention to us. And he's actually selling, 40 or 50 thousand cars quite regularly. And as Warren and I have gotten older, I think with each decade, we've had to learn, or we would have been slowed down. And I think we finally learned that paying a little more attention to human quality, not that we were ever light on it, but I think we learned to even emphasize it more. So now when I see some obvious case of extreme human quality, I'm more inclined to back it. In the early days, we had a cigar butt theory of investment. We wanted to invest in a pile of assets that was so strong that an idiot could run it. And frequently an idiot was running it. And we would buy so cheaply that we could succeed. But that is a very unpleasant way to make money compared to associating with people like Wan Chuanfu and Li Lu. So you can take us an example of people who slowly learned. There's an old German saying that man is too soon old and too late smart. And I'm afraid we're just one more example of that.
So do you anticipate more investments in China in companies, either similar to BYD or something else?
We've got a lot of small stores for Dairy Queen in China. We're having no problems at all, except that they're small stores and they make a small amount of money. But they're not like Costco stores. But we're having no problems at all with our stores in China. Our Israeli subsidiary has a brand new carbide cutting tool plant. And of course, Victor is our partner in bringing NetJets to China. And so we, if anything, we're more active in China than we are in most other foreign countries. So we not only have no prejudice against it, we really like it. The Chinese are very entrepreneurial people. And they like investing, and they like mathematics, and they like achievement, and they like learning, and they like quality. And I feel quite comfortable with the Chinese.
Great. So, Charlie, just for your information, if you ever have an interest to establish an endowment fund for Committee 100, Li Lu will be running it. Okay. He will be in charge of the investment.
Well,
so
I'm still trying to build up my assets to provide for my old age.
Okay, Jim. So now, question for you. In fact, as I asked earlier about the popularity of Costco with the Asian Americans here in the United States, and obviously it's not just Asian Americans. Actually, it's Costco have done so well. For all these years since you founded the company. I guess I'm looking at also from your, financial report and so forth. You've done really well also in Taiwan, and you've done really well in Japan, Korea, and all those Asian countries. And I guess following pretty much a similar formula here, and then things are going really well. I guess my question is that, how come you're not in China?
I did not put him up to this yet. He's doing this himself.
For those of you who don't know, Charlie is on the Costco board of directors, and of course gives us advice and a little nudge every now and again about going to China. And last board meeting, he commented to us. He said, "I still have a photographic memory. I just no longer get same-day service." Yeah. Well, the answer relative to the way we've grown our company has been that we've always been very cautious. People comment all the time. They say, "Gee, these things are so successful. Why don't you put in 100 a year?" We've been very mindful not to outdistance the management team that we have capable of running these. We develop all of the management within our company. We want to build quality Costcos every place that we go. We have a lot on our plate at the moment. We think that we have great opportunity to grow in the countries where we currently do business. And certainly, as you alluded to, we're very successful in Taiwan and South Korea and Japan. And we think that there are opportunities sitting there for us to take advantage of. We certainly recognize the global economy, as Victor was suggesting a few minutes ago. I mean, interestingly, about a third of the merchandise that we sell in Japan and South Korea and Taiwan is U.S. goods. And I probably would surprise a lot of people to think that there would be that big a spread and that big a penetration in U.S. goods in that market. The answer relative to China and when we'll go to China, we will definitely be in China. Hopefully it will be during my lifetime, or Charlie may kill me. But we'll be there. But there are a lot of things that are unsettling to us about China, and we want to make sure that we know and understand what we're getting into if we go there. In our view, China's been there a few years. It'll still be there in 5 years. And we'll take our time and go when we think it's appropriate and when we have the management team to get us in there.
So with that answer, I guess my question will be, are you thinking about a strategy of going on your own and identify management from U.S. to move over to China to start the business? Or are you looking at in terms of hiring people from China to build a team? Or the other way around will be looking for a strategic partner to work with to build a business? I mean, I guess which direction you want to go? Is it go alone, go with a partner, or send a U.S. team over there, or hire local management to run the business?
It's probably not in the cards for us to develop a partnership. In all likelihood, we would go and do it ourselves. We have plenty of Chinese Americans that are working for us who speak the language, who would welcome an opportunity to go to China and to start us there. They've been loyal to us and worked for us for a long time. And we're lousy partners. We want to run the whole show, and we want to determine how the business is going to be run. And we've concluded over the years that that doesn't always match up well with partners who have a different agenda and how the business should be run. Getting involved in a new country is difficult. We were partners early on, years ago, with Carrefour, and the founders of Carrefour, and they were one of the biggest international companies, probably the biggest international retailer in the world. And they told us at that time, every country is a valley of tears. And they're right. You have to spend a lot of time and energy and effort to get started in that country, put in a lot of infrastructure to get started, and we prefer to do that with our own people.
How about the experience in Taiwan or Japan? Is it also a process that takes you and Costco a long time to decide to enter those markets, or just or serendipity, or something that's just happened?
Probably a little bit of both. It did take a long time. I mean, clearly, as you might imagine, with some of the restrictive rules that that existed in Japan, we had a tough time getting past some of the zoning issues that were required, some of the multiple layers of distribution that existed on products. But once we got started and got open, the doors opened much more quickly. It was much easier once we got that first unit open. And we found that we were able to break down those barriers relative to the distribution of product relatively easily and quickly. And so, yes, it's difficult to get going. It's building the team. In the case of Japan, we did send some Americans over there. We've since developed the team in Japan. In the case of Taiwan, we were fortunate to have working for us a young man who was born in Taiwan, raised in America, and went back, and he and his wife wanted to live in Taiwan, and he's a big basketball star and a hero over there in Taiwan anyway. So he was a great emissary for us when we got started, and he's a great manager for us. So, you know, in the future, we'll probably figure out a way to get more of our U.S. Chinese Americans, as an example, into China. We do the same thing in Australia. We tried to take people that we had in our country that were from Australia and move them back to Australia.
Good. So you talked about, you know, if Costco is going to go in to China, you're most likely going to go alone, you know, which frankly, a lot of companies do that. In fact, at East West Bank, we also, when we go to China, you know, we open a branch there, we also just go on our own instead of partnering with banks over there, because oftentimes having control does help, you know, in terms of making sure you can execute properly. But I see a lot of examples of business that have done extremely well, actually, through partnership or joint venture. With that, you know, Charlie and just talked about earlier on NetJet, you know, so your company, you know, Berkshire and also Victor, I guess your private investment, have just formed a joint venture, 50-50 joint venture on NetJet in Asia. Yep. So Victor, you want to just talk a little bit more about it? So this is another kind of model which is different than go on your own. Yeah.
Well, we just formed, you know, less than a year ago, a 50-50 joint venture, not actually with Lee and Fung, but with my family investments for NetJets Asia. And our first country will be China. So we're actually now developing very rapidly the shareholder group because the laws in China require majority ownership by local nationals. So we actually very carefully selected the local shareholder group. And then we will obviously be providing, through the expertise of NetJets from the United States, expertise in terms of running the operations and so on. What I think is turned out to be a very good combination in this instance is that nobody could match the technical expertise of running basically a network like NetJets on-demand sort of aircraft. And at the same time, I think there's a lot of local marketing and also local regulatory aspects that we and our partners in China actually could provide. So actually, it would turn out to be a very good combination, I think. We find that some of the important things that we need to address are things like, obviously, safety is paramount. And another advantage that Berkshire offers is that they own another company called Flight Safety, which is the largest trainer of pilots in the world, and actually help that company also get into China, but that will be synergistic with the development of NetJets China. What would be interesting is as we sort of do the Chinese market and then think about other markets, what that model would be. You know, obviously the joint venture would probably like to operate in the countries if we're allowed to do so, or we need to form local joint ventures. So I think the situation between the NetJets, I'm glad you asked this question, and maybe what Jim's company could be different is, I think when you operate aircraft and so on, you're much more in a regulatory environment. And also, you're actually opening up a very new market, although we feel it's absolutely a fast-growing one in China. But I think what Costco would be doing would be actually new ways of, really serving up, a more traditional set of consumer products. So I would say you're absolutely right, Jim. Probably there's much less need for a local partner than a more technical and regulatory-oriented type of business.
Good. So question will be on this partnership. Who calls who first? I mean, is that like Berkshire Hathaway decided that, well, we wanted to go into the Asia market, and then they start looking for a partner, or you think that this is NetJet is a great business model, and then you need to get them to be your partner in Asia to expand,
Charlie, should I answer that?
Go ahead.
Okay. It's absolutely my thinking that NetJets is a great business model, and there's no NetJets type of model in Asia. And I actually approached Warren about 5 years ago, at which time the market in Asia was a lot smaller, a lot more nascent. And then I think NetJets was a lot more involved in Europe and getting that sorted out. So when we reconnected recently, say, hey, this is the right time, and so off we go. What's also interesting is the whole charter aircraft market is really now becoming quite global. So the customer base for NetJets in the United States and NetJets in Europe are now feeling the need for a lot of requirements in Asia, in China, and so on. And that actually then is a very good time to set something up to service their needs. So the timing was right.
So I would assume that a lot of people in the audience here are going to be very interested in potential opportunity of investing in, obviously today the second largest GDP in the world, which is China. And if they are going to that direction and thinking about they need to have some local partners to help them, or maybe getting the local know-how that can support them to grow the business, any advice that you have in terms of for U.S. companies looking for a partner there? Because, the earlier luncheon, obviously, we looked at the survey, one of the biggest concern about China, that big circle is corruption. So there's a lot of companies here in U.S., particularly like a public company like, we do, in like Costco or East West Bank and so forth. The Foreign Corruption Act is such a severe penalty if we're ever going to violate that, in U.S. So we obviously have concern about going to a foreign country that potentially have a perception that have corruption. So in that respect, what are the advice you have for them, and how did you sort of like help these companies to navigate through that kind of climate?
Well, I think, first of all, I would not advocate thinking of finding a local partner just to handle, sort of whatever local practices. Because I think, yes, you need local knowledge, but you would still like to do it in a totally transparent and international way, and you try to navigate your way around those, and in a way that is not detrimental to the business. I think that's the way I think I would look at it. And I think my advice would be that a local partner would be very useful in areas in which there's a lot of local knowledge that's needed. The more localized the business is, the less international it is, then I think the more you would probably want a local partner to be involved. China may look like a monolithic country from afar, but I think as you get into China, I think it's anything but. So I think there's a lot of things at the different levels of government, at the Beijing level, at the provincial level, at the city level, at the local level, and I think you need to sort of understand what's happening. And also the other thing I would say, perhaps something useful for you to consider, Jim, is that in my mind, the Chinese consumer is actually developing very, very rapidly. his taste and everything is changing at a phenomenal speed. Now, we deal in markets globally, and we frankly seldom see anything that's changing that fast in terms of their taste, what they demand, what they want. So in that sense, some good local knowledge would be useful, and that, you know, and knowing how to sort of monitor that Chinese consumer as that Chinese consumer develops. So those are some of the thoughts I would suggest.
Very good.
Yeah.
So let me switch gear a little bit, and Charlie, this is a question for you. With the global financial crisis in 2008, and then, you know, obviously it has, you know, weakened the American economy, and then currently, you know, Europe is going another potential meltdown. Looking at the U.S. economy today, and also looking forward in the next several years, what do you see in terms of the economic future of United States, and what are the type of industries or business that you like, that you think that still be sustainable, profitable, and what are the industries that you're trying to avoid, and because of the current economic situation that will make those type of industry will suffer continued deterioration going further?
Yeah, well, Berkshire doesn't have any master plans. And in fact, we don't have any master planners. And we very seldom hire a management consultant. And we tend to just buy opportunistically. If we like the business and we like the people, we go in, and if we don't, we don't. And that sounds like a very peculiar way to run a company, but that's the way we do it. I see so much folly when people do these enormous plans, and then plans get a life of their own, and they do some dumb thing just because it's in the plan, even though the facts have changed. And we don't do any of that. And it's worked pretty well for us so far. We have our occasional glitches, but we're not going to change our methods. So I don't have any great theories about. The one general theme that I have, I think you'd find quite interesting, because I think in both China and the United States, there's a lot of truly stupid thinking which has become endemic, and that's on energy policy. You know, so often the American politicians have to have energy independence, and businessmen will even have to have energy independence, and academics have to have energy independence. And of course, China is full of people that talk the same way because they've learned from the same economics textbooks, but they're all totally wrong. Let me explain. If energy independence was such a good thing, let's just imagine that we go back to 1930 or something like that, and we get hell-bent to have total energy independence from all the foreigners. And we just drill and use every technique and dimension we can, and we produce our hydrocarbon reserves, which are absolutely certain to be limited, much faster. Well, by now, we'd have way less in reserve, and we would be way less independent. In trying to get energy independence, we would have destroyed our safety stock of oil within our own borders. Oil is absolutely certain, oil and gas, to become incredibly short and very high priced. And of course, the United States has a problem, and China has a worse problem. And China has exactly the same correct solution. The imported oil is not your enemy, it's your friend. Every barrel you can use up that comes from somebody else is a barrel of your precious oil, which you're going to need to feed your people and to maintain your civilization. And what responsible people do with the Confucian ethos is they suffer now to benefit themselves and their families and their countrymen later. And the way to do that is to go very slow on producing your own oil. Just produce it fast enough so you keep up with all the technology. But the correct policy in both countries is to go very slow on producing domestic oil and not mind at all that they pay prices that look ruinous for foreign oil. It's going to get way worse later. Every barrel of foreign oil you use up, instead of using up your own, you're going to eventually realize you were doing the right thing. Why are the policymakers in both countries so stupid on this single issue? Because they're not stupid generally. I think that it's partly the economists that have caused the problem, because they have this theory of if people just react in a free market, it's much better than any kind of government planning. But there's a small class of problems where it's better to think the things through in terms of basic science and ignore these signals from the market. Now, if I'm right in this, there are a whole lot of lessons that logically follow. The foreign oil is your friend, not your enemy. You want to produce your own assets slow. The oil on the ground that you're not producing is the national treasure. And in addition, you get into thinking like, you really want to be more afraid of running out of hydrocarbons than you are of global warming. It's not that global warming isn't serious, but running out of hydrocarbons is like running out of civilization. And all this trade, all these drugs, fertilizers, fungicides, herbicides, pesticides, which China needs to eat with the population so much, they all come from hydrocarbons. And it's not at all clear that there's any substitute. When the hydrocarbons are gone, I don't think the chemists are going to be able to just mix up a vat and create more hydrocarbons. It's conceivable that they could, I suppose, but it's not the way to bet. And so I think we all should be quite conservative, and we should pay no attention to these silly economists and these silly politicians that tell us to become energy independent. Let me pose a question for you. It's 1930. Oil in the United States is in glut. We have cartels to get the price up to 50 cents a barrel in some places. Everywhere we drill, we find more oil in our own country. Everywhere we drill in Arabia, we find even more. And what would the correct policy of the United States have been in that time? Well, the correct policy would have been to issue $150 billion of very long-term bonds and cart 150 billion barrels of Middle Eastern oil into the United States and throw it into our salt caverns and leave it there untouched until the current age. It's easy to see that in retrospect. But who do you see who ever points this out? Zero. We have a brain block on this issue. We should behave now to do on purpose what we did by accident. We conserved some of our oil because we weren't aggressive enough and smart enough to get it out faster. That was accidentally doing the right thing. Now we should do on purpose what we formerly did by accident. We should conserve, and we should subsidize the new form of energy that is going to replace oil, which China's doing. We should support these big national grids. There's all kinds of policies that are pluperfect, obvious, and it requires a total reversal of thinking, and it's sort of counterintuitive. But I had an interesting experience the other night at dinner. I was seated with a Caltech professor who should get the Nobel Prize, and he probably will. And he was talking about energy independence, and I said, "You're all wrong on that. You know, what an 88-year-old man is talking to a future Nobel laureate. He's all wrong, and I'm right." And I made my arguments, and he said, "Well," he says, "you're right. I'm changing my whole point of view." So I've given you the argument, and I've given you the right response.
Well, Charlie,
from here on, it's up to you.
I think that you get a better audience in China because in our democracy here, with politicians thinking about,
Yes.
one person, one vote, they don't usually like to hear sage advice like you. They just look at whatever is popular. But actually, I do find that, many of the senior leaders in China are very, very interested in the energy policy, and they are aggressively actually working on alternative, energy solution. And you've seen, I mean, this is one of the areas, as you said earlier, this is an area that a free market doesn't work too well. Sometimes you do need to have government to step in and provide certain level of support to get it to a certain stage of market conditions so that we will allow the free market to play someday down the road. So let me switch gear again, Jim, and I'll come back to you now. Although you have not invested in China, I'm sure actually on a day-to-day basis, you pay a lot of attention to what's happening in China because a lot of your goods are supplied by manufacturers in China. So we've been hearing a lot of news about inflation, particularly in the wages inflation in China. Like a good example will be a company, Foxconn, who make the iPad and Hewlett Packard and Dell computers and all that kind of stuff. They have to increase their labor wages dramatically, double, triple in a way that to sort of like make up for the difference because of, frankly, two things happening. Besides the inflation, there are a lot of demand for labor workers in China these days. So, which caused these companies to really have to accelerate and pay more, and which obviously have an impact to the cost of your goods that you acquire. So, are you seeing more pressure coming out from China in terms of cost inflation, and what are the alternatives that Costco can think of in case in the future it does get a little bit too cost prohibitive? If you think about, maybe going to other countries, other developing countries, or have you thought about any other alternative solutions, like even in U.S.?
Well, I think yes. Clearly we see some increases coming in prices, but we don't see it at an alarming rate, so it's not something that would concern us at this moment. But there is an increase, and we certainly recognize that many of our suppliers in China are having difficulty with labor at this point and finding workers and also producing the goods. But, it's not something that I think is totally unexpected. I mean, if you went back to the end of World War II, when the goods were coming out of Japan, and as that economy, as the prices went up, it moved to Korea, then moved to Taiwan, it's moved to China. My guess is that it will be in China for a number of years, and that we'll continue to see with the labor market that's available there, we'll continue to see a lot of goods coming out of there. We sell an enormous amount of goods. I mean, we directly import a lot of goods, but there are a tremendous amount of goods that the components that Victor alluded to earlier that are not visible in terms of the products, that are coming from all over the world. Unless you start to think about it, the amount of ingredients that go into vitamins and glucosamine and CoQ10 and that type of product that no one ever dreamed was coming out of China in many instances. So we'll continue to get the products there. There will be some increases. There is some inflation at the moment, but back to what Charlie was talking about relative to energy and all of those things, I don't think it's troublesome at the point. We've not had any long periods of inflation in our country and in our pricing, and I guess that what little inflation we have right now is probably affordable.
But your buildings are quite energy efficient now, right?
Oh yes, yes, we do. Well, we do everything we can, but even in a state like Hawaii, our average building will pay something like $200,000 a month for energy costs.
Well, just you wait. These will be the good old days.
Victor, anything to add on that question that I just asked?
Let me just perhaps follow on to what Jim was saying, which I totally agree. I think what you really got to go back to, perhaps just to give everybody a little bit of background. I think in the last 10 years, I think the distribution of income in China has gone really very much out of kilter. So there's a lot of concern about the discrepancy between the rich and the poor. And I think what has really now happened in the current 12th five-year plan, which has just started, there is a great attempt to adjust this. So what we're really seeing in China, as you alluded to, Dominic, is that there will be a very steady increase in wages. In fact, the 12th five-year plan mandates a 13.4% increase in minimum wage every year. So over a 5-year period, it will be over 80%. As a result, I think there are two things that will happen. One is China will then, obviously, the manufacturers need to trade up, need to have more mix of capital and innovation relative to labor content. And a lot of the lower, the more sort of labor-intensive products will be migrating. And I think, as Jim's right, I think there would not be any lack of sources of alternative. I think people talk a lot about Vietnam as a place that is filling up. Also, you go to Cambodia, and we ourselves feel a country like Bangladesh will come up very rapidly. Ironically, I think Yashing and the panel earlier in the morning talked about India. So ironically, we don't see this really coming up too fast in India, which is another discussion. But so there'll be a lot of trade diversion from China. But overall, I think it would be it would not have a major impact. But generally, though, I have to say the following: if you look back again in the last 30 years and then look forward in the next period, China actually was a big disruptor to the global economy when China opened up. It's 1.3 billion people in terms of labor force at that time, and then 1.3 now coming into the consumption market, and these are big disruptors. So what happened for a period? China became the factory for the world. And because of this huge influx, one sudden jolt of labor, basically it kept labor prices very low globally. Now I think since 2008, and that I always look at that as watershed events like what you mentioned with Foxconn and so on, and this new trend in China about raising minimum wages and really making the distribution between rich and poor, the income distribution, a lot fairer. I think China is no longer going to export deflation, so to speak. It will be actually exporting inflation, at least the China factor. But overall, I think I agree with Jim that I don't see a huge rise in your import prices, but I think there will be diversion away from the China market towards other markets that will make up your imports. So I think that's basically the fundamental trend. But it's quite interesting that China now actually is going to be a huge factor in terms of adding to the global consumption market. And that's now coming into play. And it's, in a sense, the labor impact is now sort of passing. Now it's the consumption impact.
Actually, this is an interesting point. In fact, President Obama now is also advocating a campaign about trying to bring American business home. So instead of made in China, trying to make it to be made in America. And it's a very noble notion, I think, but one of the biggest challenges that for so many years, as you talked about, and that China had disrupted the manufacturing labor market. I think this is an area that, despite the fact that now I can go to Victorville and Palmdale and found property and land prices substantially lower than Shenzhen, in China. You're seeing these kind of price changes that makes America to be substantially better positioned to build a manufacturing place here, and then maybe adding more laborers, since we have so much unemployment. But the challenge that I found is that we don't have that many factory managers, engineers that worked on these manufacturing plants in the United States, because we ran all these jobs out for years, and trying to find these kind of workers is very challenging. If we have unemployed laborers that are willing to take minimum job, you don't have the middle managers. And that, I think that is a very interesting dynamic here. Just not that simple, just to bring the job back, because a lot of skills are there. You know.
Can I respond?
Sure, please.
Yeah, I think there's another factor that will bring jobs back. And that is, I think the requirements from the retailers in terms of very fast replenishment is becoming more and more, mainly because the consumer markets are being more and more fragmented. And you're really now seeing larger and larger number of niche markets developing. And those basically need very fast response. Now, when you actually need fast response in your supply chain, you really want to be in the local market, even if you have to pay a premium for the reordering. So you see that the manufacturing is going to move closer to the consumption markets, and that's another reason for bringing it home. Yeah, I think you're right about the know-how, but import some know-how from the Chinese as well.
You know, Dominic,
Yep.
I visited Foxconn,
Yeah.
and it's an amazing thing to see. You can have a Walgreens drugstore in Chicago email an order to them for some iPods or iPads.
Right.
They pick the order, put it on a FedEx truck, and get it to the airport, and it's delivered the next day.
Yep.
That's an incredible turnaround. I mean, you're talking about a supply chain process that is so sophisticated and is something that we don't have available in this country at this moment.
I have tons of questions here from the audience, which I'm going to ask. So Angie, how much time do we have? 15 minutes. Okay, so let me just go right at it. You know, so first question to Charlie. Is from Charlie to Charlie. Okay, so in your opinion, what's the biggest challenge for Chinese companies in assessing U.S. capital markets and investments?
Well, I think China has been following pretty close to perfect policies from the viewpoint of China. No nation this large has advanced this fast in the previous history of the world. And the way they've denied themselves current consumption to save and invest for future consumption, the discipline of the system where there's not much welfare and a deep reliance on a Confucian family ethos. And all those policies in China have been huge successes. And the rate at which they've learned what they had to learn was simply awesome. And so it's hard to quarrel with. I don't see huge problems for China. If you got 1.3 billion people in a world where petroleum is going to get short, that is a real problem. But it's a long-term problem. I don't mean really long-term, but what I think in terms of what might be called the strategy and tactics of moving the people ahead, it's hard to find much wrong with China. I think they've been lucky that the Communist Party in China evolved into a sort of a Confucian meritocracy where everybody's been to engineering school. That's not the kind of communists that ruined countries practically everywhere else in the world. And it happened with no wars, no nothing. It's never happened before on this scale. So I have very little to criticize with it, and I think that to some extent that they've been lucky they don't have our politics. India's copied English-speaking politics to the place where they're paralyzed. China want to get the job done. And no wonder that China is winning and India is losing.
Okay, Jim, as a question for you. You mentioned that there are currently aspects of China that are unsettling to Costco. This, I guess, from your earlier comment. Can you expand on this and discuss which issues are of greatest concern in China that cause you not able to move forward, and what would be needed to overcome them?
Well, first and foremost is the corruption, the bribery, the issues that everyone has spoken about. Those are major concerns for any business person going into a country. And essentially the rule of law. You know, is our investment going to be safe there? And can we make certain that we can protect it over the long haul? And are we going to be able to run our business the way we want to run it under the parameters that we've established? I mean, those are things that we have to settle in our own mind before we be prepared to go there.
Well, they just removed one of the worst malefactors. They're moving in the right direction.
Which one did they?
Bo.
Oh, yeah. Yes.
The Chongqing experience, okay? Anyway, so the next question is for you, Victor. Can you talk about your search process and criteria you used when you were looking for a local Chinese partner? Do you even have a local Chinese partner?
Yeah, well, sure.
What
China
criteria?
is such a big place. I would say the first and foremost would be ability to communicate with our culture. You know, we're Chinese, we're from Hong Kong, but it doesn't mean that the culture that we have in Hong Kong is similar to other parts of China. So I think the ability to be able to be on the same wavelength is very important. You know, and for us, we value transparency and things like that very much. So you got to find somebody that could actually deal that way. The other is to look for people who are actually strong in areas in which we are not strong. So, you know, it's the other complementarities that we're kind of looking for. But generally, I think we like people that think long term. You know, we're a family company. We basically want to really stay steady on course for decades and generations. So my final thought would be that when I talk to somebody, can I have this person as a partner? I'm going to ask myself, what is going to happen to this person or this partnership 10 years from now? Is he going to be around? What's he going to be like? If we do well, is he going to now go off and do something else, etc.? So I think long-term stability is what we will be looking for.
Good. So Charlie, another question. This person's interested in your, investment advice. Says that with Euro crisis, softer Chinese economy, is the U.S. a safer haven? Give me a tip. So, here's a multiple choice here. U.S. real estate or U.S. stock market or fixed income?
Let me get my pen out.
I think long-term bonds at current interest rates are for suckers. So I'll delete that one. On the rest of it, I give you the high roads of the kingdom.
Any more further comment? Okay, Jim, just question. Do you see long-term declining value of the US dollar? And if so, what's the best way to hedge against this?
They're asking me that question?
Just more Costco members.
I mean, do you guys think I'd be working in the retail business if I could figure that out? Really truthfully, I think the U.S. dollar will remain strong, in my view, and that we're a very stable country. We are still going to continue to grow a major portion of our business in the United States over the years, irrespective of the amount of international growth that we do. So we have a lot of confidence in the country, and we think that I'm optimistic that the country will make a comeback relative to manufacturing as well.
That's great. So Charlie, your closing remark. With what you heard last night and then this morning, what's your view of the U.S. and China relationship in the next decade or so?
Well, I'm quite optimistic, and I wouldn't be too disturbed by the prattling of our politicians. We don't listen much to them ourselves. And by and large, we don't admire them very much ourselves. You know, the reputation of the politicians of America goes down, down, down. All the surveys show that. So if we can endure our politicians, why, you can handle all of them too. Just treat it as noise.
So you feel that despite all the noises, the relationship should be pretty stable and strong going forward?
Well, both countries would be out of their minds not to make this work. We are a natural marriage for the betterment of our countries and the world. And we face one another across an ocean with Los Angeles on one side. I mean, this does not take a lot of brain work to know that this is important. And given the forces in place, of course we have to adapt reasonably to one another. And I think it's working pretty well, all things considered. When you think of what China was like when the Cultural Revolution was brought into place, and compare it now, it's hard to be a pessimist. You have to have a real taste for misery to look at this achievement and say, well, it's going to hell. Yeah.
So, Victor.
Yeah.
Your closing remark. I would like to ask you to comment on with what's happening now between U.S. and China, and particularly, all these political rhetorics about, whether it's trade deficit, as you talked about earlier, it doesn't make a lot of sense. But what are the way that China can do to help, balancing this U.S.-China relationship, and is investment one alternative?
Okay. Thank you, Dominic. I think if you look back again for the last 20, 30 years and look at this bilateral relationship, there's obviously been benefits and issues, costs on both sides. But I would make a case that net-net has been a huge amount of benefits for both countries. And let's not forget that. Going forward, if we look at what's going to happen in the next 10, 20 years, we are now, between China and the US, engaged at such a deep level. You would expect the more two large economies engage, the more issues come up. It's just a result of deeper engagement. When you're just sort of working with each other at the fringes, there's probably very little to actually interfere. So what I really feel, this is very, very normal. What we're really in is a very, very important but very complex non-zero-sum game. It is not a zero-sum game. And I'm looking at the Committee of 100's model, common ground. That's what we really need to really seek out and really look for that area in which we can do things that are cooperative. Now, let's not be naive and think there are no differences. The part that didn't come out was, as I understand, right, Committee 100 is respect the differences. Respect the differences. So what we really need to do is to flush out where we're different, accept that there will be differences over time, and we work on those, but we crystallize those and we respect those. But at the same time, look for that common ground where we can actually pursue cooperative strategies that will be to the mutual benefit of both countries. I think, yes, investment is definitely one big way. I think China is looking for investment opportunities. And I was going to say earlier when I talked a little bit about supply chains is foreign direct investment have a direct impact on trade and on jobs. It's absolutely direct impact. If you look at China's example over the past periods, in fact, half of China's exports is actually done by multinational companies invested in China. And so drawing in foreign direct investment actually helps the trade deficit. And at the same time, it creates jobs. So I think that's definitely a very important way forward. But having said that, I think that the fact that we're now engaged, and I'm really, again, very proud of the role that C100 is playing. I think what we really need to do is to have everybody focus on the common ground and the things that we could do together that are cooperative, and not let the differences, which we need to flush out and respect, sort of dominate the whole agenda. And I think that's the name of the game. Sometimes we forget that there are win-win strategies. We keep saying this, and I think that's true of both sides. The final thing I would say is, my own impression is that it's not only for China, I think for Asia generally, I think I can make this point. The Asians and the Chinese know a lot more about America than vice versa. And I think there is a information asymmetry here. And I think, a la all the points that everybody has made in different sessions all through the day, if we're able to actually sort of work on that information exchange, especially having Americans a little more understanding of the situation on the ground in China, then I think it would be very conducive. I think there is an information asymmetry here. And it's important for all of us to think about how we can address that. Once we address that, especially at the people-to-people level, which a lot of speakers have alluded to, I think the relationship is going to work out a lot better.
Great. Well, thank you for your great comment. And I look at the watch. We are right on time to finish. And so with that, I want to thank all our three panels. Again, Victor, thank you so much for...